Navigating the vast ocean of the stock market can be both exhilarating and daunting. Here, at the Profit Pulse, we aim to be your guiding star, illuminating the intricate pathways of stocks and trading. Before we embark on this journey, let's unravel the essence of the stock market. Number 1. Shares and ownership. Imagine the world's leading companies as magnificent pies, each slice representing a fragment of the company's entirety. When you buy a share, you're acquiring one such slice, effectively becoming a part owner of that company. The beauty of this system is its democracy. From the small retail investor to the massive hedge funds, anyone can have a stake in a company's successes and failures. Over time, as the company grows and flourishes, the value of your slice could grow, potentially offering you returns on your investment. Number 2, exchanges, the heartbeat of the market. The stock market isn't just a vague concept, it's a tangible place. Major exchanges like the New York Stock Exchange, NYSE, or the NASDAQ act as the central nervous system of this vast entity. Envision them as bustling bazaars where shares are the goods being haggled over. These exchanges ensure there's a standardized system for trading, setting rules, and ensuring transparency. They give both individual and institutional investors a platform to buy or sell shares, fostering a dynamic environment where prices are determined by the laws of supply and demand. Number 3, issuing stocks, the lifeline for companies. At its core, a company's decision to issue stocks is a strategic move to raise capital without incurring debt. It's like opening the doors of a business to the public and saying, "Believe in our vision, invest with us." This capital can be a game changer, fueling research, innovation, and expansion, or perhaps consolidating debts. For investors, it's an opportunity. By buying these shares, they're placing a bet on the company's future, hoping how their belief translates to financial growth. Valued viewers, if you're finding this content insightful and it's helping you navigate the world of stocks and trading, please take a moment to give us a thumbs up. Your support means the world to us. And if you haven't already, hit that subscribe button so you never miss out on our expert insights. Now let's continue our deep dive into the stock market. Traders versus investors, the sprinters and the marathon runners. While both are players in the game, their strategies often differ. Traders, the sprinters of the stock world, are in for the short haul. They meticulously monitor market movements, news and trends, making rapid buy or sell decisions, often within minutes or hours. Their goal: capitalize on short-term fluctuations. Investors, on the other hand, are the marathon runners. Their eyes are set on the horizon. They research companies in depth, believing in long-term growth. They're patient, holding onto stocks for years, even decades. Risks and rewards. The dual faces of the stock market. Every coin has two sides, and so does the stock market. On one hand, there's the tantalizing promise of substantial returns, with stories of stocks soaring and investors reaping rewards. But the market's volatile nature also means prices can plummet. Various factors, from global events, company performances, to economic indicators, can influence these swings. Hence, while the potential for profit is undeniable, it's crucial for investors to be well-informed and prepared for the ups and downs. Stay with us at the Profit Pulse as we delve deeper into these topics and more, providing you with the insights and tools to navigate the exhilarating world of stocks and trading.